Hello traders, this is Bernard from Binary Winners Club. On this video, I want to show you an easy trend lines strategy that you could start using immediately. Bonus, I will also show you where to download the automatic trend lines indicator I use in demonstrating how this strategy works. Enjoy this video. Great. Trend lines are lines we draw on our charts, connecting two lows in the case of an uptrend, or connecting two highs in the case of a downtrend. Sometimes you can connect two lows and two highs in a channel that's trending upwards or trending downwards. The most important thing you need to know is you need to have at least two swing lows to draw an uptrend line, and you need to have at least two swing highs to create a downtrend line. Okay? And the line is drawn projecting to the future so that you are able to take a potential trade. Okay? What you see on your chart here, for example, illustrates what I'm talking about. This is a channel with a trend line at the base and a trend line at the top. Effectively, the trend line at the base connects swing lows. This is a swing low, what you see here. This is another swing low and another swing low, okay, and another swing low here. So these are 3, 4 swing lows. At the top, we have a swing high here, and another one here, another one there, and yet I think there was another one here, okay. Looking at this section here, this is an uptrend line connecting this swing low here and another swing low here. This is a downtrend line connecting this swing high and this swing high and this swing high. And you can do the same to the rest of the segment of the screenshot you are seeing on the chart. Okay. How do these trend lines work? How do we trade them? There are about many ways you can trade this, but the popular ways of trading trend lines are: one, you can play the rejection. That means you will anticipate that price will hit the trend line and bounce back, causing a reversal. Okay, that's what you see here. That's case number one, a reversal. Okay. Case number two, you can also project from your analysis that price will most likely just hit that trend line and consolidate around it. In other words, to start bouncing up and down, up and down, up and down, waiting to break or waiting to reverse. Okay. The third way is price will just hit your trend line and break it through and continue in that same direction. So you could play a rejection or a reversal. You could play a consolidation. You know, a consolidation, really, you don't want to place a trade. You have to wait to see what happens. And of course, a consolidation leads to a reversal or leads to a breakout. Now, the challenge most people face, and which I faced quite some time, for quite some time when I started trading, is how do we draw these trend lines? How do we get to draw them on the chart? And many people teach different ways, but what I say is you look at key swings, what pops out from the chart, a key swing high or a key swing low. Okay, if you have two swing lows, connect them. You have an uptrend line. If you have two swing highs that are popping out to you, you can see they are significant highs, just connect them and you have a downtrend line. However, many people still have this problem. So what we do is then we use the benefit of automation technology or programming, in which case we use automatic trend line indicators. Okay, like I mentioned from the beginning, we have a solution. In this particular video, we not just teach the strategy, we also share with you the automatic trend line indicator I'm using in my demonstration. And by the way, it is free. Okay, so watch until the end of the video. I'll show you where to download it from. Okay, cool. Up next is, let's see some of the trend lines. These are screenshots of what I took today from my MT4 platform as I was preparing this video. Okay, what you can see is we have a swing high here, another swing high here. Effectively, we have a trend line. This is a trend line. Okay, and as a trader, you would wait for price to come to that level and then decide what to do. The strategy will show you what to do. And there are very many ways of trading trend lines by day. I'll just be showing one of them or a few of them. Then as you can see down here, we still have a swing low and another swing low. What happened? When price came back to that trend line once again, you see how it reacted. In this case, it rejected and caused a reversal. Remember, we said price can reverse from a trend line, can break the trend line, or can consolidate along the trend line. So in this case, a clear reversal formed when price visited your trend line again. Okay? So let's talk about the strategy itself that I will be showing you. In my strategy, a simple one, which I encourage you to study carefully and enhance on your own, customize it, and find what works best for you. Step number 1, you must ensure that you have a confirmed uptrend line and or a confirmed downtrend line. What am I saying? Don't worry. The indicator will have this drawn for you already on the chart. In other words, you should have this line or this line on your chart. Okay? That's step number 1. Step number 2. With step number 2, you wait for price to come to the level. You wait for price to come to the level. That's what I showed you in this particular example. Okay? So in this particular example, I demonstrated that we had a swing low here and another swing low here. Remember, as I said, you need to have at least 2 swing lows for you to consider that a valid trend line. Some other professionals will say you must have 3 swing highs or 3 swing lows, but hey, price doesn't touch the trend line too many times and respect it. I always consider maybe the third touch. Now, after the trend line has been drawn, you have this and you have this. The first and the second touch will be the most significant. And so, for me, 2 swing highs or 2 swing lows are enough. You wait for price to come. So price went up, came back to your trend line. All right? So that's where we are with our strategy. Okay? That's where we are with our strategy. Now, that was step 2. Now, step 3, you read the candlestick pattern or formation, for price action signals. So you wait until price touches your trend line, and then you read your price action signal from there. Now, I will show you, even from this particular example, the previous one, that after price touching here, when price came back and touched the same level once again, what did you notice? What do you notice, guys? Look at this. Do you see anything peculiar about that candlestick pattern? You guessed it right. That is a bullish engulfing candlestick pattern. A bullish engulfing candlestick pattern. And it's one of the most powerful patterns out there, especially when taken at Confluence levels. Support, resistance, trend lines, Fibonacci levels, and pivot points, even Bollinger Bands and stuff like that. So in our particular case, we read an engulfing candlestick pattern, a bullish one, okay? A bullish one from this level. Of course, it would have been a bearish one from the top, but from the bottom line, that is a bullish one. And that's what we read. And that is what our strategy says in step number 3. Step number 4, not very key at the moment because I want to make it simple and easy. But for you to become a pro trader, for you to become a professional trader, don't just depend on the first 3. They will give you some good wins, but I really think you need to consider confluence. You need to consider confluence of factors. And for me, I will check either volume, trend direction, whether there was a support resistance in that same area, or what the Fibonacci retracement level was. Whether it is a 50%, I like 50%, and 61.8%. Okay? 61.8, which is actually around 62%. So I would consider that. And stay along. I will show you how I use all of this. Okay. Now, strategy example number 1. We have our level starting from here. There is a swing low there, another swing low. So the trend line indicator automatically draws. By the way, it draws this based on fractals technology. You know, a fractal means an up fractal simply means we have a candle at the center here. Let me show you how a fractal works. Sorry, let me pick this. You have a candle here. Okay, let's assume there's a wick and a wick. And you have another candle from the previous one, and another candle from the previous one, and another candle from there, and another candle from there. Okay. Now this is our fractal candle. When does it happen? It happens only if the low of the middle candle is lower than the low of the 2 previous candles, and it's also lower than the low of the 2 future candles. Did you hear that? Future candles. Effectively, that means this fractal becomes a fractal. This candle is considered a fractal. In other words, the signal will start from here only after the last 2 candles have shown. In other words, you will have 5 candles, and then that's when the pattern forms. You will see your point or your dot here. All right? It is not repainting. It's what we call backpainting, because it has to consider the previous and the future. But once this pattern is complete, the fractal is complete and does not repaint. Okay? Of course, it cannot keep on drawing those many things on the chart forever, because as the chart moves, it needs to clean up. So do away with old or historical data. So with that said, look at this. This red, the red and the other green, the lows are not lower than this. This and this, the lows are not lower than this. So this becomes a fractal low. The same thing with this green. This and this have lows not lower than this. This and this have lows not lower than this. So this becomes another fractal. So that is the swing lows. So there's a swing low here, there's a swing low here. Effectively, the line is drawn by the indicator. So what you do is you wait for price to come back to that level, which happened here. All right? And you see what price action signal you can read from there. What I notice, there is a bullish engulfing. There is a bullish engulfing pattern forming right on your trend line. And if you were to consider this for a trade for 3 candles or so, your trade would have expired ITM somewhere up here. Okay? For 3 candles, 7.5. Right? That's example number 1, simple without Confluence. Example number 2, same thing. This time, there's a low here, another low here, and price comes back to your level down here. The next thing you see, bullish engulfing, and if you took a trade for 3 candles or so, it will still expire in the money. Okay? Example 3, both lines are facing upward. Okay? The trend is very strong to the upside. All right? So we have we have a swing here, another swing here, another swing somewhere here. So we already have several swings previously. The line is already drawn completely. What you notice is when price comes back to the same level, it gives you an interesting candlestick pattern. Look at that. That's what you call a morning star of some kind. Not a perfect morning star. You can still call it a 3-bar reversal, but most of you would want to associate it with a morning star, where we have a bearish candle with a small green candle and a large green candle that closes at least above half the red candle. So when you see a pattern like this, the market is saying, hey, we think of going up. And that's what happened in this particular case. Your signal would have ITM'd 3 candles, 5 candles later. So I've shown you 3 examples without Confluence where you are simply trading off the trend line. Now let's look at trading with Confluence, where you add other factors. Okay? Now, when you are adding other factors, like I said in the previous one, I was introducing the strategy, you can check your confluence with volume, confluence with trend direction and strength, adding support and resistance of Fibonacci levels. So the next example is using support and resistance. Now look at our chart, guys. The swing was created here, another swing was created here, so that the indicator automatically drew your line. Came and touched this level, okay? The engulfing is forming on the trend line. I am not very comfortable with it. Of course, you could trade it immediately because this candle also touched support, okay? So even if you were to trade from here, this engulfing, although I don't like this kind of engulfing, right? So it's tiny candles. Even if you were to trade it from here, still an engulfing or even a morning star again, if you combine this and this and this, guys, you need to be familiar with candlestick psychology. 3 candles later, the signal would have ITM'd here. 5 candles later, it could have ITM'd here, okay? But in case you didn't do that and you waited for a more serious confirmation, what happened here? A serious bullish engulfing, which can also be considered a 3-bar bullish reversal. 1, 2, 3, okay? So you enter trade from the beginning of the next candle. For 3 candles, that would have been an ITM, and I want to believe the market continued upwards, okay? So that's example number 4, where you ensured, the focus here is you ensure that your signal formed where there was a support and there was a trend line, and we had an engulfing candlestick pattern. So 3 things telling you the market is likely to move up. Next, example 5. Here is Confluence with actually 2 things, okay? So this is a put, or we are trading lower. There's a swing high, another swing high. So we are waiting for price to come back to the same level. What did you notice happened here? We have a resistance already. I have another indicator that draws for me the resistance levels automatically, so don't worry about that. But you can look for such kind of things online. So what you notice is price comes back to your upward trend line or resistance trend line, which is also at the same level as your horizontal trend line. And what did you notice? A pin bar, a bearish pin bar forms here. This candle is a pin bar, or you can call it a shooting star. And then you see, if you look at this and this, what do you notice? Bearish engulfing. But if you look at the 3 candles, what do you have? Evening star. But interestingly, don't stop there. When the pin bar was forming, look at the volume down here. This is the pin bar, this green small candle, and this is the volume. Now compare that with the previous candle. This was a very large green candle. Look at the volume bar down here, and look at this tiny body with a similar volume. The market is cheating you. No wonder pin bars are also called, what are they called? Cheating candles. Yes. All right. So it's a lying candle. So in that case, the volume you see down here is not commensurate with the size of the candle. The market is cheating you. But what confirms is we have a bearish candle that's very strong, telling you that the market for sure is now pushing downward. If you entered from here 3 candles, that signal would have expired here, or even 5 candles later, you would have been ITM. So in our case here, we have several confirmations. Number 1, we have a trend line, we have a resistance, and we have volume, plus a candlestick pattern. Great. And even the candlestick patterns themselves are giving us more confluence. We have a pin bar, we have engulfing, and we have the 3 of them forming, an evening star. Okay. I believe this should be the next last example. Confluence with EMS. Moving averages are used to filter trends. All right. So in our particular scenario here, we have a trend line down here, a swing low, and another swing low. All right. But what you notice is price hits your trend line. That should be like where the fractal begins, actually where the trend line begins drawing. But what makes it interesting is the moving lines are the moving averages. These are 10, this is a 20 EMA. There's nothing unique about them. This line is the 10 EMA. The other one, which color is this? The other one is a 20 EMA, okay? So they have already flipped. They have crossed over. telling you that the market is likely to move or change direction to the upside, because the slower moving has crossed above the fast moving average has crossed above the slow moving average, or 10 has crossed above 20 EMA. Then after crossing that way, price also broke resistance, as you can see here. Price has broken resistance on this candle and even on this, and has gone up several candles. Then price tried to push back down all the way to your trend line. All right? But could not. Look at how the rejection was. Massive rejection. There is a long wick. Then immediately the candle prints a very huge bullish engulfing. This candle engulfs this. All right? Seriously. That tells you something. The moving lines are telling you we are now beginning an uptrend, or we are actually in an uptrend because the crossover up and down here. The trend lines are facing up. This is pointing up. This is pointing up. The price is being rejected from both support and the trend line. And we have a bullish engulfing candlestick pattern. Okay? So if you were to enter this for 3 candles, you would have OTM'd the signal because the price came and crossed somewhere here. For 5 candles, that would have been an ITM. I must remind you, when you see huge candles like this, do not be quick to take a trade immediately. You know why? Price always tries to retrace because these are huge distance covered. Price will try to come or retrace to some section of this engulfing candle. And so I wouldn't be very comfortable. Usually when I see that, I would like to take a trade when price comes back to the midpoint of this huge engulfing candle. And that would simply mean I would have waited for price to come back to somewhere here, and I entered my trade from this, which would have closed somewhere here. Okay? So that is my last example. Conclusion. I will be doing later videos. I'll be doing some more videos on how to trade trend lines, and I'll be presenting more trend line strategies like breakouts. Okay, we have done reversals. I'll be looking at breakouts later on, right? So you need to start practicing how to use this indicator. Keep it in one of in your toolbox as one of your items in your toolbox. Okay, for trading, start practicing how to spot some of these nice reversals right on your trend lines. Okay, and ensure that you also add some confluence factors like support and resistance, moving averages, volume, like I've shown, even Fibonacci's. Okay, so what do I expect you to do? I would expect you, number 1, stay subscribed. If you are a new member to our channel, it's called Binary Winners Club. Please subscribe to our channel. Don't just subscribe and disappear. Also, click on that notification bell. When you do that, you will get alerts whenever we upload a new video. Then you'll be able to watch it quickly and give feedback and start benefiting. Okay? Apart from just subscribing and hitting the notification bell, frequently check on our channel and see what new videos are there, or simply check previous videos and learn and keep learning and keep watching the videos. Get to learn is free content. Now, if you like any of our videos, perhaps you have enjoyed this one, kindly like the video. Comment that you like the video, you have enjoyed it. Share it with your friends. There is a share, there's a way you share these, videos on YouTube, and I know you know that for sure. So just share it with your friends. Otherwise, before I say thank you for watching, I want to remind you, right under this video, you go to the description section under or below this video. The description section under this video will contain a link to where you can download the automatic trendline indicator. Click on that link, follow it through, come to our Telegram channel, it's free to join, and download our indicators there. There are many others there. This will be added and you'll find it at the top. So click that channel link right under, below the description section of this video. Follow it through to Telegram, and you will be able to download it from there, together with other indicators that I've managed to share before. To this extent, may I say thank you so much for watching this video, and I hope you'll remain a subscriber and spread the word out there about Binary Winners Club, where we trade with confidence. And because of that, may I say bye-bye for now. See you in the next video.